Chapter 2 review questions. So just like Chapter 1's review questions, some of these questions will randomly appear on the pretest and the test. And these are also great questions to be put on flashcards for you to study. So let's start with the first question. Notes payable is what type of account? So remember, any account with the word payable in it is a liability because that means we have to pay it sometime in the future. Notes receivable is what type of account? Anything with any account with the word receivable in it is an asset because we're hoping to receive something in the future, therefore has a future benefit and it's something that we own. Prepaid expenses, I should say prepaid expense is what type of account? So this is like office supplies and prepaid rent and prepaid insurance. It's something you've prepaid ahead of time and it has a future value. It's not been used up yet, so therefore it is an asset. What do you call a liability for which the business knows the amount owed, but the bill has not yet been paid and therefore the transaction has not been recorded? So this one's a little bit tricky. So it's a liability that we know the amount of, but we haven't paid it yet and therefore has not been recorded. This is called an accrued liability. So you need to get used to this word accrued. It means something has accumulated but not yet been paid. In this case, it's a liability that has accumulated but not yet been paid. What do you call a list of all of a company's accounts with their account numbers? Not their balances, but account numbers. That's a chart of accounts. What do you call the right side of an account? That's the credit side. So these are all just basic questions that you should know. So make sure you study these. What do you call the people to whom a business owes money? That is a creditor. A creditor is someone that the business owes money to. Like if you have a loan on your car, then the bank that gave you the loan, they are your creditor. They give you credit. What do you call the left side of an account? Debit? Hopefully these are pretty easy for the most part. Which side is always the plus side of an account? Now you can't say debit. Debit is the plus side for assets, but it's not the plus side for liabilities or revenue or capital. Okay, so remember the plus side just means the normal balance side. So don't choose debit. Sometimes people get tricked by this one. What represents the debts the business owes because it signed a promissory note to borrow money or to purchase something? Usually includes interest payment too. So this is a notes payable. What do you call a written promise for future collection of cash? Usually includes interest collection too. So someone's going to owe us or someone's going to pay us money in the future and it will probably include interest. That is a note receivable. Now your answers might be in a different order, so just be careful. What do you call the process of copying amounts from the journal to the ledger and then you're updating the balances in the ledger? That's called posting. Now the nice thing about real world accounting is almost always done with a computer. And the computer will do the posting for you, which is good because posting is the most tedious part of accounting. Expenses paid in advance of their use. Because they have a future benefit, they are considered assets. So what do you call Expenses that are paid in advance, prepaid expenses. The chart of accounts is listed in which order? You should know this. It's assets, liabilities, owner's equity, revenue, and expense. So assets, liabilities, owner's equity, revenue, and then expense. The accounts on a trial balance are listed in which order? Well, it's the same order that the chart of accounts goes in. So it's assets, liabilities, owner's equity, revenue, and expense. A chronological, which means ordered by date, so a chronological record of transactions does not contain account balances. That's the journal. Contains all transactions for each account, ordered by account, and has account balances. That's the ledger. So remember, the ledger is divided up by accounts. Cash would be first, and within the cash section, you'd have all the transactions for cash, and of course, the ledger has account balances. What do you call a listing of all accounts and their balances? Does not contain individual transactions. It only contains balances. Now, it's not the ledger. The ledger does have all the accounts, and it does have their balances, but the ledger also includes individual transactions. So the thing that contains a list of all the accounts and their balances is the trial balance. A liability created when a business collects cash from customers in advance of doing work. So a customer pays us, but we're not going to give them the product or the service yet for whatever reason. It's considered a liability because the cash has been received, but the work has not been done. Therefore, the business owes the customer the work that has not yet been done. What do you call that? That's unearned revenue, which is a liability. Unearned revenue is what type of account? Well, we just discussed that. It's a liability. So remember, unearned revenue happens when a customer pays you ahead of time, but you've not given them the product or the service yet. Therefore, you owe them the product or the service. Therefore, that's a liability since you owe someone something. And that's it.